How well do you know the EFA ETF? Ultimate quiz on iShares MSCI EAFE ETF. What does EFA stand for in the context of ETFs? Answer: C. iShares MSCI EAFE ETF. Explanation: EFA stands for iShares MSCI EAFE ETF, which tracks the MSCI EAFE index, encompassing developed market stocks in Europe, Australasia, and the Far East. Which index does the EFA ETF track? Answer: B. MSCI EAFE Index. Explanation: EFA ETF tracks the MSCI EAFE Index, which includes stocks from developed markets outside of North America. In what year was the EFA ETF launched? Answer: B. 2001. Explanation: the EFA ETF was launched in 2001 to provide investors exposure to developed international equity markets. What does EAFE stand for? Answer: B. Europe, Australasia, and Far East. Explanation: EAFE stands for Europe, Australasia, and Far East, representing the regions included in the MSCI EAFE index. Which of the following countries is not typically included in the EFA ETF? Answer: C. Canada. Explanation: Canada is not included in the EFA ETF as it is part of the North American region, while EFA focuses on Europe, Australasia, and the Far East. What is the primary investment strategy of the EFA ETF? Answer: C. Equities from developed markets outside North America. Explanation: the EFA ETF primarily invests in equities from developed markets outside of North America, providing broad international exposure. Which of the following sectors has the highest representation in the EFA ETF? Answer: B. Financials. Explanation: financials typically have the highest representation in the EFA ETF, as many large financial institutions are based in developed markets. What type of management does the EFA ETF employ? Answer: B. Passive management. Explanation: the EFA ETF employs passive management, aiming to replicate the performance of the MSCI EAFE index. How is the EFA ETF typically traded? Answer: B. On major stock exchanges. Explanation: the EFA ETF is traded on major stock exchanges, providing liquidity and ease of access for investors. Which of the following is a primary benefit of investing in the EFA ETF? Answer: B. Diversification across multiple developed markets. Explanation: the EFA ETF offers diversification by providing exposure to multiple developed markets outside of North America. What is the typical expense ratio for the EFA ETF? Answer: B. 0.32%. Explanation: the typical expense ratio for the EFA ETF is around 0.32%, which covers the costs of managing and operating the fund. Which company issues the EFA ETF? Answer: C. BlackRock. Explanation: the EFA ETF is issued by iShares, which is a part of BlackRock. What is the ticker symbol for the iShares MSCI EAFE ETF? Answer: B. EFA. Explanation: the ticker symbol for the iShares MSCI EAFE ETF is EFA. How often does the EFA ETF pay dividends? Answer: B. Quarterly. Explanation: the EFA ETF typically pays dividends on a quarterly basis. What is the currency risk associated with the EFA ETF? Answer: D. Moderate. Explanation: the EFA ETF has moderate currency risk because it holds international stocks, which can be affected by fluctuations in foreign exchange rates. In what time zone are most of the markets covered by the EFA ETF? Answer: C. Multiple time zones. Explanation: the markets covered by the EFA ETF span multiple time zones, including Europe, Australasia, and the Far East. Which of the following is a primary goal of the EFA ETF? Answer: B. Capital appreciation. Explanation: the primary goal of the EFA ETF is capital appreciation through exposure to developed international equity markets. What kind of investment vehicle is the EFA ETF? Answer: C. Exchange-traded fund. Explanation: the EFA is an exchange-traded fund, ETF, offering the benefits of diversification and liquidity. Which of the following economic indicators can impact the performance of the EFA ETF? Answer: D. All of the above. Explanation: the performance of the EFA ETF can be influenced by various economic indicators, including those from Europe, Asia, and other regions. What is the typical benchmark index for comparing the performance of the EFA ETF? Answer: C. MSCI EAFE Index. Explanation: the typical benchmark for the EFA ETF is the MSCI EAFE Index, which it aims to replicate. Which of the following is not a benefit of investing in the EFA ETF? Answer: C. Active management. Explanation: the EFA ETF is passively managed, which helps keep costs low and provides broad international exposure and liquidity. Which of the following regions has the smallest representation in the EFA ETF? Answer: D. North America. Explanation: North America is not represented in the EFA ETF, as it focuses on developed markets outside of this region. What type of companies are included in the EFA ETF? Answer: C. Large, mid, and small-cap companies. Explanation: the EFA ETF includes a mix of large, mid, and small-cap companies from developed markets. How does the EFA ETF provide diversification? Answer: B. By including stocks from multiple international markets. Explanation: the EFA ETF provides diversification by including stocks from various developed international markets. What is one risk associated with investing in the EFA ETF? Answer: C. Currency risk. Explanation: currency risk is a significant factor for the EFA ETF due to its exposure to multiple foreign currencies. How can an investor buy shares of the EFA ETF? Answer: B. On the open market through a brokerage account. Explanation: shares of the EFA ETF can be bought on the open market through a brokerage account. Which of the following asset classes does the EFA ETF belong to? Answer: C. Equities. Explanation: the EFA ETF belongs to the equities asset class, as it invests in stocks of companies. What is one way to mitigate currency risk in the EFA ETF? Answer: A. Using currency-hedged versions of the ETF. Explanation: investors can mitigate currency risk by using currency-hedged versions of the EFA ETF. Which of the following is a competitor to the EFA ETF? Answer: B. Vanguard FTSE Developed Markets ETF, VEA. Explanation: the Vanguard FTSE Developed Markets ETF, VEA, is a competitor to the EFA ETF, as it also provides exposure to developed international markets. What is a potential advantage of the EFA ETF over individual international stocks? Answer A. Lower risk. Explanation: investing in the EFA ETF can provide lower risk through diversification compared to investing in individual international stocks.